Hey, this is Matt from InvestiQuant. Today is Thursday, December 16, 2021. The markets gapped up this morning on this day before options expiration, and we have seen weakness come into the markets. Generally speaking, this is a bullish day normally, looking at some seasonality stuff, but that is not playing out. We're seeing weakness come into the markets. We're trading down near the lows of the session. We're below the open. We are below yesterday's closing price, and all of the markets with the exception of the Dow, which is held up a bit stronger today. So we're going to look at what has happened historically when you get that type of weakness on the day before options expiration as we head into the close here. I'm getting everything selected, all the instruments. The setup will be based upon entering the market long at 3 p.m. Eastern Time and exit at 4:15 p.m. Eastern Time. Now, this morning we did gap up. I'm going to add that to the study by going to the opening filters. Add that by clicking on gap up. Next, I'm going to go into the post-open filters and say at the time of entry, the price is below the open and below the prior day closing price. We'll need to confirm that at 3 o'clock, but currently that is true. So to do that, I'm going to go to where is the intraday close versus the intraday range, and I'm going to hit equals next to close below open. That means that the 3 o'clock price would be below the opening print for the session, and then I'm also going to do the same thing with where is the close at 3 o'clock relative to yesterday's close, and I'm going to grab this below prior close. So I got equals for below prior close. That adds it to the test. Next thing I'm going to do is I'm going to go down the indicators and I'm going to click that we are above a 200-day simple moving average. I'm going to miss the 10-day here just because I want to keep as many samples as possible. And then lastly, go to the market events library and say that today is the day before the options expiration day. So I've clicked that from the active today. Now I can click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap up on the day before options expiration day and are above a 200-day simple moving average, and then at 3 o'clock, you're seeing weakness defined as trading below the open and below the prior day close. So historically, we've got 24 samples for the S&P, 23 for the NASDAQ, 23 for the Dow, 29 for the Russell. Win rates on 3 of the 4 are coming in a little bit weak, with the S&P coming in at 46%. NASDAQ's the only one that's favored at 61%. The Dow, 39%. The Russell, 45%. So a little bit weak as a group. If we look at the average moves, the average loss is larger on all of these. So the S&P has average loss that's about twice the size of the average win. That's the case for the NASDAQ as well. The Dow average loss a little larger, and the Russell is a little bit closer in size, with the average loss just being slightly larger than the average win. So all 4 of these instruments have been more susceptible to bigger moves on the downside when this is shaping up with a weekday heading into the close on the day before options expiration day. The win rates on them are a little bit mixed, but if you group them together, they'd just be slightly weak. But the bigger takeaway there that I see is the bigger moves have been on the downside. Hopefully you found that helpful. Good luck today, and we will see you next time.